Hello everybody, welcome back to the channel. I have an amazing video for you guys today. We are going to be talking about the housing market. Here is an article from Yahoo Finance that you guys are gonna wanna absolutely listen to this. Check this out. The title, historically, housing has led us into every recession since World War II. And some people are echoing that we have a recession in our hands right now. So what does this mean for the housing market? Well, what it means is that it's probably gonna start going down. Now, we have seen the prices slightly go down, but as I jump into the charts in a minute, you're gonna see how, unfortunately, the prices are still super elevated. And one thing that I have learned over the course of my life is that the housing, right, is correlated with the community. So it's very simple. You go to college or whatever, or to a trade school, or you have a job, you save up money and you buy a house in your community, and then you basically live the American dream. But unfortunately, what's been happening over the past, years and years is that obtaining a home has become so difficult, so much more difficult than it was back in the days. And the problem with what is happening as a result is that people are having to commute even farther and farther to their job in order to find affordable housing. And by affordable housing, I'm not talking like like dirt cheap. No, I'm talking about still expensive, okay? It's still expensive to even live out in the suburbs. It's just more affordable to live in the suburbs than in the cities closer to where the jobs are. So the problem is that now it's becoming like a problem where even now the suburbs are too expensive. Now everything is too expensive. So as I have reported on my channel, is that we have seen an increased drop in new home building. So now what we're having essentially is a housing crunch, a supply crunch, which is definitely keeping those prices elevated. Now, what's gonna happen? Well, something's gonna have to give, because at some point, either our corporations come in and buy all our single family homes and then we just become renters for the rest of our lives, which, could happen to a certain degree, or, what prices come down to an acceptable level so that where our community could actually buy where we live, buy a house where they work and where they want to live, right? Those things have to match. And one of the things that we did see in the last 2 years was record low interest rates. And as a result, we saw corporations and people with the means really take advantage of the situation. We had record low inventories too, so it just created this awful bubble, right, where it just shot prices sky high. Look, we jump into the Redfin weekly housing data and we look at median sale prices. Look how much the median sale price jumped from 2019 all the way up to 2022. It's insane, right? I mean, we were as high as 396, but we started off at that same time last year at 279. So this is great if you own a house, but what ended up happening essentially was people who owned the house, they were like, oh my God, I bought this house for, $350,000 and now it's worth, $480,000. This is amazing. Okay, but that same person, unfortunately, couldn't afford to sell the house and move into something else, right? Because the idea was that if they did sell, there wasn't anything else available and the prices were going up really fast. So they were essentially going to downgrade, right? So a lot of people were like, screw it, I'm not gonna sell. What they did, what they essentially did instead was, refinance their mortgage, and a lot of people took out seconds on their home. And that is part of how the economy got stimulated, right? Basically, with coronavirus crashing everything, the government had to do something, the feds had to do something, they lowered the rates, and that gave people a lot of cash in their pocket. Plus, there was all that COVID relief money. I mean, you've heard the stories of people that were on unemployment, plus they were getting extra money every month. Well, that amounted to tens of thousands of dollars for people that they probably never seen that type of money before. So what did they do? They spent it on the economy. So that's why, a year ago when you wanted to buy an electric bicycle or something, they were all sold out. Why? Because all these people got all that money and then they went out and bought things, right? That's why they were saying you would go in and you couldn't even buy workout equipment. Remember, like all the gyms closed, so now there was like no more workout equipment anywhere, and they were selling dumbbells that you could have bought at Target for like 25 bucks. They were selling them for like 85 bucks online because there was none available. And with everything shutting down, it created a supply issue just across the board. So basically, when you look at these charts right here of the year Redfin weekly housing data, this is the year-over-year change. Red line was coronavirus 2020. Blue line was 2019, normal. Look how normal that looks, right? And then you see these two lines, 2021, just crazy. And now we're seeing this weird slope down in 2022. So guys, as a whole, my prediction is that right now, I do believe that, yes, we do have low unemployment, which is amazing. And people are making more money because, as you remember, we had the Great Resignation. So in order for people to bring employees back into their company, they had to raise the wages. So now that also creates inflation. Why? Because now when you start hiring people at higher prices, that is basically going to raise the prices of your products. And when that happens across the board, when you have companies across the economy raising their prices to, raising their employee salaries, right? And I'm not talking about minimum wage, man. I'm talking about like jobs that pay, $20, $30, $40 an hour. When those people raise their prices, what ends up happening is that everything just becomes more expensive. So that is something that helps keep inflation up, right? It's not just about gas prices. It's not just about gas prices, okay? Yes, gas prices are also part of it, but they're not the only part, okay? And this is not, like a lot of people have been saying that this is like artificial inflation. Let me tell you, it is not artificial inflation, okay? We ended up printing $10 trillion. We ended up giving, money out to everybody, right? Record low interest rates. Essentially, we're going to have to pay for that. This is, the gas prices being up is a result of inflation, right? So, and houses being at this price is a result of inflation. So, we're gonna see a downturn. I'm sorry, I wanna take that back. The houses going at this price were the result of record low interest rates, but this is what's going to cause the inflation. This is what's causing the inflation. So sorry, just taking that back. But anyways, what we're gonna need to see definitely to get back to normal, in my opinion, is the prices need to come back down to at least 2019 levels. I would want them to come down a little bit below that because I think 2019 levels were still a little bit elevated, but whatever. It would be better than what we have now. And I know there's gonna be a lot of pain. For the price to come down this low, there's gonna have to be a lot of pain in the economy. And we're just gonna have to see how this all plays out day by day. This is such a moving target, and if you're into it, if you like learning about the housing industry, please, subscribe, because I'm going to be making these videos every single day to make sure you guys are up to date with the latest news. Now, as a whole, if you go into the Redfin housing downturn risk score, by the way, I have links to all these stuff down in the description below. But basically what's happening is, if you live in any of these red areas, red dots, you're going to see a change in a downturn in the prices. So just, if you're a buyer, hold on. If you're a seller, man, your window is getting shorter and shorter every day if you want to cash in on those high profits. It wouldn't be a bad idea if someone's really smart out there, to time it perfectly where you could literally sell your house today, get record high price, and then buy back in 1 or 2 years for a record low. That I do not. I mean, you gotta be really smart to play the market that way. But we might see those success stories when all the dust settles here. So in general, guys, be smart, do your own research. Do a more holistic research, like, watch these videos, then go read some articles and look at how your specific neighborhood is doing, because, it's buying a house is a great investment. And my only advice is that it is the best situation is to be able to buy low, and, even if you have a semi-elevated interest rate. But it's more important to buy low, in my opinion, and then you could refinance always for a lower interest rate later in life. So, but getting that low price definitely is going to make you a lot happier. Trust me, because remember, it's always nice to have equity in your house. Now, with that said, guys, I want to just say a big, huge, incredibly huge thank you to all you guys who have been watching my videos and commenting on my videos, liking my videos, and supporting my channel. Thank you guys so much. This means so much to me. Like I said, I recently started this channel, and I've had great success with getting a lot of views, and it's only growing more and more. So I'm really happy about that. So yeah, if you guys are not subscribed and you do like my videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. Thank you guys so much for watching. I love you guys, and I'll see you on the next video.